Welcome back to the Money and Wealth Show. I'm Sterling Fox, and our special guest this week is international silver analyst David Morgan. I want to talk about you have the 10 rules of silver investing available on your website, and it's for free. You can just pop by for a visit, and they're right there for you to look at. But you talk about the importance, and have many times on this program already, about owning silver. And I want, for clarification purposes, for you to define what percentage of that silver should be coins or bars or wafers versus silver mining stocks versus paper that says you own silver somewhere, but somebody's keeping it safely for you. And I think that's probably the least desirable of the three options for you, isn't it?
Absolutely correct. And there isn't one size fits all or an absolute perfect answer, because it's a case by case individual basis. But the main principles are very sound. You should have your precious metals portfolio starting with the real metal first, metal that you can actually go touch, unmargined, that is yours. And once that's established, then I really like to go into the mining shares, because that's where you get leverage. And this time around, I think in this bull cycle that we're probably halfway through, I think we've got a long ways to go, at least 2 years, maybe 5, maybe even longer. There's going to be a day, in my view, where it's going to be very difficult to get the metal. We've already seen that. It's a fact that last summer or so, it was very difficult to get physical silver and gold, and you saw a very big discrepancy between the paper price on the futures exchange and the COMEX in the United States and what you actually had to pay a coin dealer to obtain it. And I think that's a precursor to what we're going to see in the future. Because of that, I think you're going to see these mining shares really do well this time, because people that can't get the physical metal are going to go to the next best thing, and that's the mining shares.
Now, would this be all the miners, the small caps, the mid caps, and the big companies, right across the full mining spectrum?
At the end of the cycle will be everybody.
Okay.
But right now, where we are in the cycle, you want to be extremely selective, and I've been very selective all the way up. I like to put serious money into a serious company, and I like to put speculative money into speculative companies. And that's the best way to play it. I mean, some of my peer group have said, well, a small company can grow faster than a big company. That's true. Or, how many, like buying an acorn versus an oak tree. But they don't finish the analogy. Because if you look at an oak tree, you see how many acorns are underneath one. And then you stop to really think through how many become oak trees. That's a good analogy for the junior mining sector.
True.
There's a ton of acorns, but very, very few become an oak tree.
So that's still high risk in your mind.
So if you can buy an oak tree that's in the growth curve, it's an oak tree. So that's like a mid-tier company or maybe a top-tier company that's going to grow. You got almost a sure thing as long as we're in a bull market. And that's what I teach. So, but there's so much more money that's available through the paper market. So I don't want to be disingenuous in any way. You can definitely start with the precious metals. I'd say for most people my age category, pushing towards 60, you should be looking at about a 50-50 split, which would be about half of your portfolio would be physical, and the other half would be in other investments, primarily in top-tier companies and speculations, well picked. And then if you want to go into like an option or a future or some kind of leverage or paper derivative product after that, personally, I really don't have a problem with that. But just know what you're buying. What I have a problem with is someone that buys a certificate and thinks they own silver.
The Morgan Report newsletter focuses well beyond just precious metals, gold and silver. You take a global look at all of the metals, base metals and so on, and you're talking about a bull market in precious metals, David. What about the other part of the metal spectrum? What's out there right now that you're keeping a sharp watch on because it's really starting to gather your attention because it's going somewhere?
Well, I'm not very good at the energy sector, not that I couldn't be, I just don't have the time to devote to it. I mean, oil's over $80. I think, we've seen the bottom of the oil market for sure. Everything runs on energy. As bullish as I am on the precious metals, let's face it, the most important thing for us as a commodity basis is energy. I mean, people think that the world runs on finance and money and banking and everything that we talk about all the time, but it doesn't. The world runs on energy.
Right.
And without energy, nothing gets accomplished. So that primarily means oil. So that's something you want to keep in your portfolio. The second thing, back to the main point, is, what do I like right now? I was asked a few months ago, what did I like? And at that time, nickel looked very undervalued. Nickel started to make a pop here. I like all the metals. That's what I, favor. That's what I'm the most studied in. But the agriculture sector is really going to get a lift here over the next few years. So I like that as well. I'm not real studied in it, but I do keep a global perspective. I mean, water is something that no one really talks about. That's essential, and there's probably as big a water crisis in the near future as there's a potential oil problem. So there's a lot in the commodity sector. I think if you spread out, if you don't know what to do, you can buy the CRB, you can buy the CRB index and go with that. I mean, these ETFs, which isn't my favorite investment, but if you did what we just outlined, certainly you can buy an ETF to be well-based in the commodity sector without a lot of effort.
I wanted to very briefly, and we don't have time to do it justice, but I wanted to touch on it just for your reaction. There are allegations out there before the Commodity Futures Trading Commission and other regulatory agencies of massive price manipulation on the part of some big players, people like JP Morgan Chase and others. They are before these regulatory commissions right now. There are whistleblowers who have been personally pushed around mysteriously and so on. Are you aware of this? And is this an ongoing phenomenon, or is this a recent thing?
It's an ongoing phenomenon. First, I want to be clear that I don't believe a major trend in a market could be manipulated.
Okay.
So no matter who it is, the major trend for gold and silver is up. Now, within that uptrend, certainly the markets can be moved around, and a great deal. All markets move on buying and selling pressure. So for a very long time, the market doesn't care if the selling is real or the selling's on paper. So when a bank or two come in and sell a year's supply of silver in 2 trading days or 2 hours or 2 minutes, for example,
sure, yeah.
It's going to move the price down substantially. And who in their right mind would sell that much silver even if it was on paper at one time? There's got to be a motive behind that. So I think it's very clear for the record. But I also want to be clear that it's not just the gold and silver markets.
Right.
I mean, it's basically pervasive throughout the financial sector. Now, the problem is a lot of people think if they can do it once, they can do it forever. And they can do it for a very long time, but they can't do it forever. The markets are stronger than anybody, even the Federal Reserve, even any central bank on the planet.
So don't overreact to these sensational stories, other than the fact that they have a basis in fact, but it's pretty pervasive practice right across the full market spectrum.
And especially in the gold side. I mean, gold has basically been manipulated by every government on the planet ever since it was defined as money by the people. I mean, that's really the story. So we can't get too excited it's happening again. It's always happened.
You can read more of Mr. Morgan's work and analysis and study of the global marketplace on themorganreport.com. And David, there's a newsletter availability to people who want to subscribe to your work. It's an excellent website, and you do terrific homework.
Well, thank you very much.
It's a pleasure to have you on the program today. We appreciate your taking the time after flying back for how many hours to pop in and visit us and join us here on the Money and Wealth Show.
Several.
Thanks for coming by.
My pleasure.
We'll be right back.